Well, hello and good morning, everyone. This is Vera FX speaking, and I'm using Zoom to share the screen so that all of you can see. So, as I promised you guys that I will be sharing a live analysis of Volatility 75 index, as you can see. And without further ado, let us begin. So, I'm using TradingView. I always use TradingView to analyze my charts because I believe it has all the tools that you need. It's clear and it has existed since the beginning of trading. I always like to use it to analyze. So the first thing that I like to do is I like to come on my time frame, and I start on a higher time frame, like 24 hours. That is the daily time frame. So as you can see on the daily time frame, we have seen that it has been on a downtrend for the longest time from up here, from this level of 871, 782. It has been downtrending, went up a bit, came down, now it's here. What it's doing here, this is called a consolidation. And what usually happens in the market when a chart is consolidating is that there is a fight between the buyers and the sellers, to see who will overcome the markets. So when a chart is consolidating, like here, let me draw here. And here. So what's happening in between here is that the market is consolidating. There's no clear movement. There's no clear bearish or bullish movement. So before that impulsive move, what we call an impulsive move is like what happened here. So this is what we call an impulsive move. An impulsive move meaning there was a sudden move to either side of the market. Now, for example, here, there was a sudden bearish movement. That is what we call an impulse. And you see, before the impulse happened, we had this consolidation here, right here. So in between here, we had the consolidation, and then the market broke out of the consolidation into the bearish move that you see there. So what is happening right here is that on the daily time frame, we have this consolidation happening. And as you all understand, or if you're a beginner and you don't understand, a daily time frame means that one candlestick, let me zoom in. This is what we call a candlestick. One candlestick represents one full day of a chart movement. So as you can see, this is the day that has just begun, which is today. This one was yesterday, like that. So every candlestick here represents one full day. So when you understand that the daily time frame happens in one full day, you will know that you cannot find an entry of a trade using the daily time frame. You cannot find the entry of a trade using the daily time frame. You have to go down. So this has given us a full picture of what is happening on a longer scale, a longer time scale of Volatility 75. So as you can see here, we have already identified a consolidation. So now we move to a smaller time frame, say the 4-hour time frame, smaller than the daily, that is. You see, when you move to a smaller time frame, the chart changes. So this is how it looks on the 4-hour time frame. So let me delete this. And then the purpose of me zooming out is I want to fully see what has been happening previously on the chart. So as you can see here, volatility 75 has been on a very, very long downtrend from here all the way up to here. It has been on a very long downtrend. That tells us that the bearish or the bears have been having the power and have been the ones who have been controlling this market. So if you are to look for entries previously here, you would like to look for sell entries. Then that would be on the safer side when you look for sell entries when a market is trending bearish. And when a market is trending bullish, you'd be on a safer side when you look for bullish entries. Yes. So now let me zoom a little bit in. So this is what is happening on the 4-hour time frame. The 4-hour time frame meaning one candlestick is happening on a 4-hour time scale. So like this candlestick here happened for 4 hours before it closed and another one opened. So this one is currently for the next 4 hours since it began. We want to see how it will go. So how I analyze or I look for entries, this is how I do. First, I would like to identify my zones. By zones, I mean support and resistance. So far, I've already identified my support. This blue rectangle that you see here, this is my support. Support meaning the market reached there, tried to go down, but it couldn't go down anymore. Just reached or attained that zone, bounced back up. It couldn't go lower than that. That's what we call support. Then I come and identify my resistance. So here, I will draw a very big resistance here. There. That's my resistance zone. So after identifying my resistance zone, and now we can see that the market is consolidating. Yeah, this is what we call a consolidation. So what I'm waiting for is, I know after every consolidation, the market either makes an impulsive move or just makes a correction. Correction, it means that, say it wanted to, after the consolidation, it wanted to trend bullish. Correction means it will go bearish, it will slightly move bearish up to a certain zone before now shooting up. That's what I mean by correction. So after identifying this, I now go to a smaller time frame, a lower time frame, that is. I'm moving to the 1 hour. The 1 hour time frame. You see, this is how the 1 hour time frame looks. What I will do next, I will also identify my zones. Here there's a very clear support. A very, very clear support there. And my resistance, which is my previous resistance. The one that you can see that happened, the most recent resistance zone that was formed. You don't go for the upper ones in this case. Now in this case, this is the one. This is my zone. This is my zone of interest. That one right there. That one right there. So now, after identifying this and also identifying the trend, you can see it has been on a downtrend and now it's trending bullish. For the past few hours, it's now bullish. So this tells me that probably the bullish movement or the bulls are the ones who are now in control of this market. After having that in mind, I come to maybe 30 minutes time frame. Now I'm looking for entries. I'm beginning to look for entries because now I've already identified my zones. We have this zone over here. We have our support, our first resistance. Let me draw the second resistance. This is the second resistance over there. Then the third resistance. So now, after identifying this, I'm now looking for what we call entries. I'm now looking for entries. So now I come to 15 minutes. I like using the 15-minute time frame to make my entries because I believe that the 15-minute time frame is like the equilibrium time frame. It's not too low and it's not too high. One candlestick represents 15 minutes. So now I would want to I would want to look for entries. And now, after identifying the trend, it's now trending uptrend, but it's not one single movement. As you can see, it moves up, goes down, moves up, goes down, comes back up again, goes down, comes back up again, now goes down. What I would want to do here, if I'm not sure, I do what is called a pending order. I hope you all know what pending orders are. That is the buy stop, sell stop, buy limit, and sell limit. So in this case, I want to react to this market. And by reacting, I would tell that this market wants to come back up to retest this zone over here. This our resistance zone over here. So now I'm looking for a buy. I'm looking for a buy. So let me just set let me give you a signal, free signal. So using my analysis, I would say that volatility 75 wants to buy and come to retest this zone, this resistance zone over here. So now what I would do is I would put a pending order. I would put a buy stop right here at 570,999.8609. Let me just move this a bit. Yeah. There. Right up to there. So you can see the risk to reward ratio is 3.68. You know, I have a stop loss right over here. I would place my stop loss right over here, where this trend line is here, right over here at 564. And my take profit one would be here, 577,151. How many pips are those from here? From 570, 577. If you're using a 0.001 lot size, you multiply by 7. That would be $7. $7. So this is how I analyze. This is how I make my analysis. It's quite simple. There's really nothing complex about it. But then again, you all remember that this is the synthetic indices market. It doesn't have any strict, rules that it follows, unlike the currency markets. It can decide to do whatever it wants. However, Us as traders, we use the price action patterns, and we look at the chart patterns, we look at the candlestick patterns. Then we try and follow and see how the market will go from there. So now, as you can see, it's now bearish. This candle, the current, let me zoom in. This candle right here, it's now bearish. So I think it will come just to make this is an uptrend. It will just come to make a higher low before now changing its direction to bullish to make a higher high above there. So this is a short and precise analysis that I made today. Nothing complex. If you have any questions, feel free to ask. Yes, guys, please interact in this community. Feel free to ask questions and interact, because that's how we all learn. You know, we are all just players in this game. We all learn at the end of the day. So feel free, guys. And another thing I want us to learn is that, as you can see, this is our resistance zone, this blue rectangle here. Once the market comes back to hit this zone, we are expecting two different scenarios that will happen. The first scenario is, once it hits here, it will respect that resistance zone and come back down. That's our first scenario. The second scenario is, once it hits this zone, it will push back up. It will continue pushing up, And what that will tell us is that it has now broken this zone. And once a resistance zone is broken, it now becomes a support. And vice versa. Once a support is broken, it becomes a resistance. Once a resistance is broken, it becomes a support. So what we'll expect is that once it breaks out from here, it wants to push further up. So it will either push further up continuously, or it will just push up a bit, come back down to retest this zone, and once it has retested that zone, it will now continue pushing up. Have you seen those scenarios, guys? That is what usually happens. Mostly. That is what mostly happens in trading. These things just repeat themselves, you know. There's nothing new in the market. What is happening in the market has always been happening. You know. But one last important thing I would want you guys to know is that we are ending the year. We are moving towards the end of the year. And what usually happens is that as we are nearing the end of the year, the charts like to, you know, they've been moving all through the year ever since January, February, up until now. So it's like they're becoming exhausted, you know. They're becoming tired. They're exhausting their moves. So you'll realize that, especially December, towards festive season there, 24th, 25th, up until the new year, the charts will either be moving slow or they'll be moving too fast, so that they set new zones and new price zones for the beginning year to begin, and the charts now to start, you know, new movements and new momentums. Yeah. So that is my short presentation for today. This is what I predict will happen. So I want to enter this buy big 75. This is the signal right here I'm giving you guys. So thank you so much for taking the time to watch this video. If you have any questions after this, feel free to ask. And, thank you. Thank you very much.